Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. It's always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, we got earnings in the headlines, 3M, Beyond, GM, lots of big names and impressive earnings as well. So interested to hear Rob's thoughts on that. Of course, very excited to interact with you all. So let's go ahead and kick off. Robbie out there?
I'm Zach. Hey, everyone. Welcome to TradeFinder Live. Happy Tuesday afternoon to you. We'll go ahead and switch the screen over. We did have just a tick down in the market, literally right before we started the broadcast. So if get a little news update on what caused that, I will pass that on to you. But for now, we'll just move forward. Yeah, it's a pretty decent move, about 20 points or so, just on the SP E-mini futures that just dropped. So taking a look at the charts for where we are before all that occurred, we were having an up day in the market, started rather flat, moved higher, had a nice day yesterday to start the day, but nothing really matters at this point, I don't think, until we take out this A wave high, which coincides with the wave 3 high. If you watch the U.S. market update over the weekend, we did have that original zigzag that was right here, which was a 61.8% target. We went right to it. When a zigzag ends, you retrace the C wave. We went right back down to the B wave all in the same day. So we did followed all the rules, hitting the target and then doing the retracement in one day on that Friday, where we had another round of tariff concerns with the U.S. and China, and you're probably all aware of all the news that has gone on since then, so I don't need to rehash it. We did come down and test the 50-day moving average. It did set up a new zigzag pattern by giving us a 50% correction. I don't like it when the corrective move is all in one day. I prefer it to be a little more set up than that, although a lot of these corrective moves on these zigs and zags all the way. I mean, we've zigzagged all the way up in this wave 3, just multiple ones. And a lot of them have been just one day on the corrective move. But we tested this one last week, and then we've been kind of muttering around the 10-day moving average, broke up higher yesterday, started again flat today, a little bit to the downside at one point, and then we're rallying nicely until whatever just happened. So I'll see if I can figure it out, but it's pretty much across the board things went down. So we'll see what happened along those lines. It's 1 o'clock. It's likely due to a bond auction, perhaps. That's when the bond auctions occur. And the tech sector took a hit. So maybe it has to do with that. And if we get the, no, there's some news now. Now President Trump's come out and said the meeting with President Xi may not happen. So that's what happened. So there's the news. All of a sudden, the hope of everything moving forward now, he's saying it might not happen. Again, is that posturing? Is that negotiating? Is that true? All these things give these short-term blips in the market. They tend to just be short-term. But back to the big picture. I quit rambling on about that, but I did want to get what the news was. At this point in time, what we're watching for is, can we break this A wave high? And I just wanted to detail the difference between a qualified and confirmed LA wave pattern. Is qualified once you hit a fib level and start to bounce, it becomes confirmed when you take out the previous high on the A, and then that leads you up towards the C wave. But one thing this move to the downside has done is set up a lot of stocks, and we're right in the middle of earnings season, an ideal opportunity, especially with the VIX being elevated now, for our special presentation I'd like to invite you to called Generating Income from Trading. This is not dividend investing. It's not, well, this is still trading, but trading methods to generate income. It should be a big part of everyone's portfolio. It is a big part of investment managers' portfolios. There's two of us, myself and Jeff Beamer, together over 60 years. We've been trading in the markets. We have a lot of great information to share with you. We'll be doing it tomorrow night at 8 p.m. Eastern Time. Again, it is free to attend. So if you haven't registered so far, please do so. Hopefully, Zach can get the link in the chat for you. Love to have you. And especially in these kind of times, I know the directional trading is what's fun and gets our juices flowing, the adrenaline, etc. But the smart money managers, the smart investment community always has a good part of their percentage, a good percentage of their portfolio in these strategies. So again, love to have you join. All right, so with that, that's about all we can talk about with the S&P for now. We'll see. We are getting a little bit of a rebound now after that comment, but it did send things down momentarily. But the key will be, can we take out this A wave high? And then we'll know more from there. I did mention the VIX being a bit elevated. We got up. This was a after hours spike that occurred when we got up near 30. We had been talking about this downward zigzag and what was going to be the catalyst. And I'd wondered, would the Fed disappoint? Well, Chairman Powell's pretty much confirmed that, without confirming, but basically in an interview last week, made it seem pretty clear that we will get the October and December rate cuts. That's what's planned, barring any sort of very unusual inflationary data that comes out. And that or a black swan event, what could create this breakout move? And we found out it was same thing that caused the breakdown move in April, the tariff stuff. Now we can see that we had the breakout and we've come back down, still slightly elevated. We've been slightly elevated all summer at 15, where we were at 12 and a half last summer. So can we hold this level and create the perhaps a downward move, or do we come all the way back down and work our way back down? This works the same. I know the VIX does it a lot, but you hear me say this, what goes vertically up oftentimes comes vertically back down. The VIX is king of that. And so we got up here, we got above the 10-day moving average. All the rules we talk about day in and day out occurred in the VIX. At this moment, we're just under 18. So just a touch lower here. VIX is coming back down as well after that tweet came out. So for some reason, a whole bunch of people sold right on that headline, and now we're rebounding. So it's amazing to me that the tariff stuff still creates this kind of volatility in the markets. To me, it shows that the markets are edgy because we all know that valuations are high, et cetera. Seems like we're looking for an excuse to sell, which I believe is what that was on this Friday when we had the big downward move. Just an excuse to take some profits. And that tells you when you have a nervous market. And it will be that way unless we can take out that A wave high. Looking at the dollar's been doing just fine. Back in the Goldilocks channel here, which I've been talking about for quite some time. This is, in my opinion, an ideal scenario for the dollar. It stays lower. It helps companies with international exposure. So far, the earnings reports have been okay, except for regional banks. That's been where there was a fly in the ointment. And Jamie Dimon from JP Morgan talking about cockroaches was his word, are existing out there. So some patches of concerning things, but the big banks are okay. And when the regional banks reported and or have been, it's not across the board, but there have been a lot of regional banks that have been having problems. And you wonder if the loan, this is what's been opined, is are the loan restrictions been relaxed with the regional banks because they're complaining about high auto loan defaults. And then the big banks are saying their auto loan business is fine. So it's a tale of two different worlds on the financials between the big banks and the regional banks. So, well, we'll look at the KRE. I looked at that over the weekend in the U.S. market update as well. Now we'll go to the bond market. I mentioned that there was an auction at 1 o'clock. We're going to get the results of that before we sign off. But you can see that we're getting this breakout. We showed this triangle here, and that's what the TLT has been doing. Prices on the 20-year, prices and yields move inversely the entire year, basically, is what TLT has been doing, consolidating, breaking out, consolidating, breaking out. And the only directional part of the moves have been the breakouts from the triangles, and then it immediately goes into a consolidation. Is that going to happen again? What I think is really interesting is when we look at the TNX, talked about now TNX's rates on the 10-year, and it's in a wave 5 to the downside pattern. We have a wave 5 to the upside pattern here. So at least the bond market has been in concert, but that's not always the greatest thing because we want a steepening yield curve. Rates should be lower on the short end and higher on the longer end. You should earn a higher rate for committing to a bond or treasury for a longer period of time, but the yield curve's flat, and meaning that the rates are pretty consistent, slight variances, but pretty consistent along the yield curve. A healthy yield curve is when they're lower on the short end and higher on the long end. That's the way things are supposed to work. So even though the economy is moving along okay, it's not really healthy by any way, shape, or form, at least not as evidenced by the yield curve. And you can see another bid on the TLT. So rates going down again today. The little gap up, maybe that will stop this upward move and then we start another consolidation, or maybe we're taking off up into this wave 5. When we go to the TNX on that end of things, you can see that we are headed to the downside. And I had made the comment that I'd be really surprised to see the 10-year get that far down, but we're breaking down nicely and have a pretty well constructed 5-wave pattern here. I like symmetry in the Elliott wave patterns and in the zigzag patterns. And this is pretty symmetrical and lots of zigzags here in the 10-year as well. So pretty classic Elliott wave pattern to the downside and breaking that wave 3 low from September. Might have to change my mind and say it may very well go down there. And the key then would be if we get that low on the short end, then do we go down that much on the long end? And with a wave 5 pattern to the upside on TLT, perhaps we do, and that keeps the yield curve flat. And we would rather see more move to the downside on the short end than the long end, at least if you're looking for a healthy economy. I know a lot of you are bearish, or at least a lot of the people in the U.S. market update are bearish and waiting for the bottom to fall out of the market. And so far that hasn't happened. I showed the chart. If you haven't watched the U.S. market update, go take a look at the chart. The Fed has started re-injecting liquidity. They've stopped the shrinking of their balance sheet. Chairman Powell talked about that in the interview last week. And there's been a move back up. Now it's just very beginning. So does the Fed keep it up? If they do, then I think that's kind of what they call the Fed put. It's going to be hard for the market to move down significantly. Doesn't mean it can't move down, but to have a big downward move with the Fed now stopping that withdrawal liquidity seems like that could be supportive of at least a stationary market, if not moving higher. Big news of the day today, gold coming back down to earth a little bit here. We've had this just incredible run. People across the globe have caught the gold bug. Was reading an article this morning about even in Australia, which is pretty resource-rich country. It's not just central banks around the world, it's people around the world. I mentioned that people in China were buying up a lot of gold, and Australia as well. And so it's just global catch of the gold bug, I guess is the best way to phrase it, that's created this move up. We got a little bit overbought yesterday, too far from the 10-day moving average. So we're coming back down and testing that today. And then the point that I've been making on the metals is when we look at the AI signals, and if you are new, if you're viewing for the first time, welcome. If you're not familiar with this software, it's from hubb.com. It's the software I use in the U.S. market updates to talk about it there. Get a copy of it for free by going to hubb.com. You get the free Elliott wave signals. They come with it for free. You do have an opportunity to subscribe to the AI signals if you want, but you don't have to get the software for free. That's your choice. But the AI had given a signal here on gold way back at 337. We had traded this triangle breakout, and the triangle rules were here. So we exited there. AI said we're going a little higher. We did. And then to the stratosphere we went with GLD and talking about SLV following suit. It has pretty significant downward move on silver today, at least by SLV. But it was the same pattern here where the AI had a target. 72% chance we'd make it up there. We called it back here towards the end of September. We did. Broke higher. Not quite as extended from the 10-day moving average as GLD was, but enough to where we came back down. And now we're sitting right on that target. And do we find footing here? Is this just a short-term correction in a very overbought scenario? Or are we going to rest a bit here in the metals and perhaps come down and form some of those wave fours? That's what you'll be looking for throughout the rest of the week, I believe, in the metal space. If we're taking a look at cryptos, kind of made a little bit of a reversal today, started lower, moving back up. I like to look at BITB. I know a lot of you like IBIT. IBIT has weekly options. I just not a big fan of people get involved in trading in the crypto space on such a short-term basis. I know a lot of people do, and they love the volatility, etc. But man, there's a lot of risk there. I get the whole long-term story of a digital currency and all that. I don't need to rehash that. But the BITB is just as liquid in the options, but without the weekly options. So I prefer to show that for those reasons. They move very similar with each other. But when you come back down, the key here for BITB is 60. Mentioned that in the U.S. market update. You needed to get back above that quickly. We did yesterday. Been a pretty broad range so far today, and we'll see if that continues and if we can stay above 60. But same thing with the rules here. Vertically up, vertically back down. Too far from the 10-day moving average, right back down. So you can see it works whether you're talking about currencies, cryptos, metals, or equities. Those rules, that's why I say no security in any time frame. Gets very far from the 10-day moving average, at least not for long. And you've just seen it across different asset classes just here already from what we've shown. It's a great rule. It's a rule a lot of people that have been subscribing to evotrader.com have incorporated and say that's one of the best rules that they've added to their repertoire. And that's the proof in the pudding there. So if we take a look at the ETHW for Ethereum, kind of hanging in there along the same lines, 27.5 on ETHW is 260 on BITB. Still have a bit of a descending triangle here. Doesn't mean we'll break to the downside, but we could. Any triangle can break either direction, regardless of what you may read on the internet. I've been doing it for a very long time. I have the AI data to back it up. It's just about 50-50. Some periods of time, maybe slightly more on one side than the other, but the average over time is a coin flip on any triangle as far as which way it's going to go. So we'll see. Can we hold 27.5? There's another little area of support at 25. So there's a bit of a base right in this area for Ethereum, but you want it to hold above 27.5 if you're long there. That would be ideal. Going to energy, looking at UNG. When we take a look here, we are getting another little bounce. I can go ahead and take this off now. That was a nice alert that we had at Evo Trader. We were fortunate. We caught that high. It was a little bit overbought from the 10-day moving average, so we took that to go ahead and exit. And that turned out to be spot on timing because got sold into again. This was a very speculative trade, not really based on anything other than it had had a big, huge downward move and felt like maybe the sellers would get exhausted for a while. That happens in the markets. Even if they feel like the price is going to go lower at some point in time, they get exhausted. You can get some bounces, oversold bounces. That's all we were looking for. Thought we might go up to 15, but luckily we took it off here. Didn't quite make it there. Made another new low, which surprised me. We broke this area here of higher lows, and now we're right back at 12 and a half. And are we just testing that level? Can we go lower? You've heard me talk about the whole supply demand issue with natural gas. We know there's going to be more demand with the data centers. The rhetoric had been that the electrical grid can't handle it. And since the administration is against solar and wind power, you would have thought natural gas was the way to go. But then there was the CEO on last week of one of the energy companies that says, we're fine. We have the electrical capacity. Don't know what they're talking about, that the grid can't handle it. At least the company she was ahead, I can't remember the name of it, but said that, yeah, we have capacity left. So if we start to dent the demand side of natural gas, which the big demand area is the data centers being built, with the fact that we have so much supply, maybe we're not done yet. But that'll have to work itself out because it's going to take time to build all those data centers. What are they going to use? Are they going to use natural gas, as they say? How much are they going to use? There's so many questions to be answered that I just think staying away from natural gas for a while is the way to go. Fortunate on that one alert, and then don't really want to get involved in that space for a while until some part of the picture becomes a little bit clearer. USO broke to the downside. We had a strangle here for EWO Trader. That worked out really well with a downward move. We had the AI target here, so we came down and hit the AI target, only a 42% chance. So we went ahead and took that off. You can see we're coming back to the 10-day moving average here, but if you've been listening, my main concern if with a downside breakout, and it would have been the opposite on the upside breakout because it already had two times when we had these spikes in oil, OPEC raised production. And if we break to the downside, how far will they let it go? They want oil prices to stay elevated. They don't want them to get out of control, but they don't want them to come too far down either because they have a limited supply now. They know that they're running out from what they have in the ground. They want to make as much as they can while they can. So how far will they let the price of oil go to the downside before they start talking about decreasing production? And so that was a tricky one here on this breakout, but it was too well formed of a triangle not to take advantage of. And once we got to a nice gain, we went ahead and took it off. So the whole energy space between natural gas and oil is, you got to have a stomach of steel, I think, right now to trade in that space because things could change so much with the supply demand side on both aspects of it. If we take a look at the rest of the markets here, and then we'll get to the Q&A and take a look at DIA. Made a new high today before things reversed. And we are kind of, we had a little bit of reverse bounce on the big spike down and then have moved down lower. So market's not liking that comment that the meeting with President Xi may not happen. So I don't know why I felt the need to come out and say that. Why don't we just wait and see if it's going to happen or not instead of creating all these wild spikes in the market? But the Dow did make a new all-time high, probably not there at this moment, and a little bit away from the 10-day moving average. So a little bit of consolidation here in the Dow is probably warranted at this point in time. We go look at the Qs. And normally you would have thought, okay, we're going to take off and run, but the Qs have been down all day, even with the interest rates moving lower, which you would have think have been supportive, but they're also at resistance of this wave 3 high. So we're at the wave 3 high, not too far from this C wave extension. Only had a 33% B wave correction. So that's where you're going to find a lot of resistance, and it happens to coincide pretty closely with the wave 3 high. So we have resistance right here in the Qs. And even though rates are going down, or at least were earlier, I don't know where they are now, is causing the Qs to bump their head a little bit at that point in time. And then if we go to the IWM, taking a look there, normally you would think, okay, interest rates going down. We've talked about this so many times that the small caps are the most interest rate sensitive sector that exists. They're small companies that need to borrow money to grow and expand their businesses, et cetera, et cetera. You know, you've heard me talk about it quite often. I repeat myself just to remind everyone because we do add new people each and every week, and some of the newer people haven't heard me say it incessantly. So I repeat the rules, one, to ingrain them for anyone that cares to listen, and then to expunge those views. Uh, Put the views out there for people that are newer. But hanging in there pretty well above the 10-day moving average. Again, with what happened just before we signed on, we'll watch that last hour of trade very closely. That's kind of the message that I've been putting out lately is ever since that Friday move, there were forced selling into the close. And when that occurred, there were sell on the close orders. It was forced selling. And I've talked about this a lot as well. Institutions must have a certain amount of cash available for immediate redemption requests, et cetera. And then, you know, to if they're on margin, if they get a margin call, et cetera. But there's a requirement that they have a certain amount of cash. And with things going down and accounts going into margin calls, et cetera, they have what's called forced selling. They may not want to sell, but they have to maintain that cash ratio. And then I was wondering over the last weekend, the weekend before this past one, would the institutions put that money back to work? Because we bounced up on Monday after President Trump sent a tweet, everything's going to be fine with China, don't worry about it. Futures like that move back up, and we had a good up day. Now we're hearing that, well, the meeting may not even happen. So um, just is creating this intraday volatility. But again, it's fun for the income strategies because you can find volatility skews, which we can take advantage of. But with the movement here, I do believe that some has gone back to work. So we look at the volume, you can see that there was that sell on the close. So that's the big institutional selling. You know, that selling is often with more volume than buying because fear is the more dominant emotion over fear and greed. But you can see a decent bar here and a couple solid ones. Not so much yesterday, but and we'll have to see where today ends. But some money has been put back to work. But I believe it's clear that not all that money that came out is going into the equities market when we go back and we look at charts like this, because the 225 basis point rate cuts are not going to create this kind of drop in interest rates. It's just not enough. So I do think some money has left the equities market and is diversifying into the bond market just for portfolio management, I believe. So we have to see if the Fed is going to continue to inject liquidity. Maybe it reverses back out. Perhaps we have more to go here on the wave 5 patterns of both the TLT and TNX. And then when they go to their corrective phases, perhaps the money goes back into equities. But lots to talk about, lots to watch over the next few weeks for sure, and into the end of the year. So with that, Zach, I'll go ahead and open up the Q&A, and we will be back to do our case study consideration just before we close out the day. So reminder for everybody to hang around for that. But for now, I'll take questions.
Sounds great, Rob. Let's get right into it. Got a question here on TGT.
Looked at Target yesterday, I think, didn't we? Or was it Thursday night?
I think it was yesterday.
Together after a while, yeah. So we talked about the discounters, and we know that the consumer on the lower income side is not doing as well as the consumer on the upper end. And Target has had their own problems. They kind of lost their way. Man, they were the darling for a while in the retail space. You can see where they were trading. And then they kind of had some inventory issues, some misguided setups of the inventories, but they've got new management now. They've remodeled their stores. People seem to like the new inventory, things that they brought in. So it does feel like perhaps Target has bottomed. We're moving into the holiday season, which should be a good time for all retailers. We'll see, with Amazon. Amazon kind of handles all income classes, but when you're looking at a Walmart or a Target or a Costco or whatever, um, you would think that those could be places of interest as people find a way to spend during the holidays, but maybe on more of the discount level. The wave four is labeled here based on this move up because it hit the 38.2% fib level. And if it does turn out to be a disappointing, and there have been some comments that at least on the earnings, and I've been mentioning this, I think we're going to have a really volatile earnings season this quarter where winners are going to be rewarded. And if you disappoint, you're going to be taken behind the woodshed. But it's going to be guidance. What's the guidance? What are they seeing looking forward? Because the numbers for the last quarter have been coming in okay. And I think we would expect that with where rates have been, where the dollar is, et cetera. It's going to be guidance on what patterns are they seeing, what are they expecting for the holiday season. And again, you never count out the U.S. consumer. Find a way to spend somehow over the holidays. But if it's disappointing, perhaps we get this wave five. But if you're long Target and it built a good base here on the wave three, and we knew that at that point there was a likelihood we'd create the wave four. Does that hold and we reverse back down to a wave five? That's what you're going to be watching. If you're long Target right now, I wouldn't get out yet, just understanding that there may be some resistance with this fib level here. And then there's some resistance not too far above that from the point of the triangle that existed back in May and June, as well as the AI determinations there. So we could bounce up a little bit higher, get up to about a 50% corrective move. But the algorithm is pretty convinced this is a wave four. So we'd have to be careful there. And, maybe we have to wait to Black Friday to see what the numbers are. And if people are spending as expected, or is it disappointing? So Target's a tough one right now. This was the bounce that was expected, but how far up does it go is tricky because it's at a fib resistance level. And if it does move higher, it's got more resistance here. Now, if it can break above 100, well, then this LA wave pattern would be disqualified and off you go. But it's got to do that first. So it's a little trickier at this point now.
Thanks, Rob. Next, excuse me. Next over, let's head to BYND.
BYND, Beyond Meat. Golly, haven't looked at that one in a while. That's why I always talk about how much fun I have doing this show each and every week. The symbols you guys come up with are so good, and not all the normal ones that we hear all the time. But I remember when goodness, this stock was way up there at one point in time. I'll just do it this way. Look where the stock was, Beyond Meat, when the whole thing came out about having substitutes for regular meat, etc. This was king, and you were getting all the fast food restaurants were using it and creating non beef burgers, etc., vegetable based. They tasted pretty much the same to me, but look where it was, and then where it is now. Amazing, from over $200 a share down to almost zero, and very close in danger to being kicked out and moved to the pink sheets. But I don't know what happened today. I don't know if this is earnings that caused this spike, but obviously there have been some heavy shorting. I can't imagine anybody still short this stock at $1. And it doesn't look like it. You can see just how small these bars are on the selling here. So this is a pretty good example of once sellers become exhausted, kind of the thing I was talking about with natural gas. And it doesn't take much volume, even though this is pretty good volume, to bump it back to the upside. But anyone that's been short, these are, you barely can see them at the bottom, have just either maintained short positions, but there have been no new short positions initiated here. I don't know what the short interest has been in this. Perhaps it's large. Maybe this is buying, but these kind of moves normally start with short covering and then can move into buying. Um, you know, it got way overdone to the upside. It was insane where it was priced over $200 a share. And it's probably worth a lot more than being down here also as country becomes more health conscious, et cetera. So I don't know if this was earnings or if this is just this started it with some short covering here and it's getting follow through today. From a technical standpoint, there is some congestion right through this area right here at about 3.5 that it'll have to contend with. Um, there's a little bit there at 3, but it's more substantial there at 3.5. So to move from here above 3.5 is going to be a little more challenging for Beyond Meat. But the other problem is we are quite a bit above the 10-day moving average now with this vertical spike. So maybe some backing and filling. And if you are long this stock, you wouldn't mind having it go a little sideways here, build some momentum underneath this 3.5 point level, and then blast through it. That has a lot greater chance of holding and breaking this high from July and moving on than if it continues this vertical move. When you break a resistance level, you don't want it to be already overbought when it breaks it because it tends not to hold. So let's consolidate here a bit, gather some energy and momentum, then break above resistance and maybe have something a little more sustainable. So yeah, that one's going to be interesting to watch. Thanks for asking. I haven't looked at that stock in quite some time. I had no idea it was down below 1.
Yeah, and it's definitely in the taking the headlines today. Question specifically on GLD. Do you think we'll get some late day forced selling?
Um, I don't think so because um, it's possible. It's a good question, but I don't know how many people are buying gold on leverage. They're actually buying physical gold. The ETF here, is paper, and we could get into the whole conspiracy thing of there is so much uh, gold being, quote, backed by all the paper in the ETFs that if anyone ever um, tried to go through and um, convert their paper holdings into physical gold, then we don't have enough. There's not enough. There's more gold's been spoken for, which some people say creates upward pressure on the price of gold as well. I don't think we're there yet. It is a big sell-off today, um, and I just don't know how much gold itself is being bought on leverage. So I'm sure there is some GLD being bought on leverage. But when you've had such a long move here, maybe they have enough margin to cover this pullback. Um, if we get another day like today, then um, we may start to get into the forced selling aspect. But appreciate you asking the question, and it's a really good one. It's just this is a little bit unique because we have something that's backed by a physical asset.
Very well. From there, let's head over to RIVN.
RIBN. Good old
VN, sorry.
VN. Yeah, VN. Sorry. I said it in my head. Rivian, I've talked about this before. Cool looking cars. Um, can they gain a foothold? Seem to be doing okay. The stock has been in a trading range for a while. It's trying to do what the IWM used to do before it took off directionally, where it was just staying in a trading range. But we have this range here at the beginning of the year that was between 13 and a half and 10. We got above it, tested 17 and a half, came back, couldn't hold it, broke below it, And now looks like maybe we're trying to build a new range and say, okay, well, if we can't build a range between 15 and 17 and a half, let's split the difference here and create a trading range between 12 and a half and 16 or so. Um, but it's tooling along. Remains to be seen how much market share it can take from Tesla, et cetera. There's so many companies in the EV space now. It's just going to be hard for um, them to do anything other than be a good channeling stock, take the runs. But as far as consistent moves, man, it's in a tough space right now. The data shows that the pace of people moving to electric vehicles is slowing, and everybody has one now. So much competition. It's a difficult space right now, but they do make nice looking cars.
Agreed. And from there, let's go to RGTI.
Yeah, probably had a bit of a downdraft with that news that came out. Another one here that I know this is a um, favorite of the retail crowd in the market. Pretty vertically up here. Uh, Same thing I've been talking about. Too vertical, too fast, too far from the 10-day moving average. We're coming back down. Where does it find the backing and filling here? Made one heck of a run breaking out from this triangle here in September and then just seeming to go up almost every day. We had a consolidation here. This is what we're looking for now. So we had the big move up. You want to see this kind of action here if you want it to turn and make another one of those runs. And we'll see if that plays out. There's a little bit of a chance that it could hold right in here, right in the 40 level, perhaps. If it doesn't, though, if it can't hold 40, it's probably coming all the way back down to 30, where this consolidation is. And with that kind of a move, I'd be surprised if it comes that far back down, but that's all part of the vertical move up. So it's a possibility. So just be aware that it needs to hold 40 if you're long. And if it doesn't, you have exposure all the way back down to 30, and it can happen rather quickly because it was just a quick vertical move from 30 to 40 on the way up. So coming back down, there would be no resistance on the move down. So yeah, something to keep a close eye on there. But pretty heck of a run there in RGTI.
Indeed. Let's go over to Ford.
Good old Ford. Always reminds me of somebody that used to give golf lessons to that was a longtime Ford executive and had just tons of shares of Ford. And it's just so widely held that it's a hard stock to get any sort of significant movement. You're not going to see this move like Rigetti, I don't think. RGTI, it's just working its way up. It had a very nice LA wave pattern here, a good symmetrical 5-wave pattern. We're right in the middle of the tap box here. And, uh, Ford went hard into the EV and then they've backed off. And just kind of surprising to me to see the stock perform as well when they seem to be flip-flopping on what their objectives are. But the market is giving them a pass with this 5-wave pattern to the upside. We need to take out this wave 5 high. So if you're long for it, I would stay long, especially update today. But if you're looking for an entry, I think you want to wait and see that wave 5 taken out right there. And then maybe we go a little bit higher. But we also have to respect that this pattern to the upside here is maturing, and at some point, unless we can extend that wave 5 past 100%, we're likely coming back down to the previous 4. So I'd be a little more cautious on Ford at this point.
Next up, we got Palantir, PLTR.
Yeah, pretty much everything in this space is having a rough day, but Palantir is so widely held. Now, when I was talking about consolidation under a resistance level, this is what you want to see. Palantir is set up really well right here, right underneath that previous wave 5 target. We went above 100%. We did the correction down to the fib level, right to the 61.8% level. It satisfied all those Elliott wave rules. So this is some sort of a new pattern that will be labeled at some point in time, because again, once we got here, that satisfied the completion of the Elliott wave pattern and the corrective phase that comes after it. We have a little bit of a triangle being formed here, which is quite interesting, right underneath the resistance area. Which way are we going to go? We're in the tractor beam. We're awfully close to 200. It's hard to imagine it wouldn't make it to 200. The wave 5 goes just a little bit above that in the tap box. So we're right in the middle of it now, as you can see. But again, it's just hard to imagine we get this close and don't actually touch $200 a share. But whatever breakout direction from this triangle occurs is going to determine whether or not that can happen or not. So I don't know what day they report earnings, but I would imagine that's going to be what creates the breakout. And just as a reminder, for those of you that might be new, it doesn't matter what the Elliott wave pattern is. You ignore the Elliott wave pattern when you have a triangle. Triangles can break either direction. So I think maybe we keep an eye on this one. It's too expensive to do a strangle on, and see what direction we break, with the risk being that most of the breakout move comes on the actual earnings report. To look that up and see when Palantir's earnings are.
While you're checking that out, the next one will be BABA.
Have to find out to look that up. So now we wonder, did that tweet cause problems again with the China stocks? I felt a little bit vindicated by that tariff Friday, tariff part 2 Friday, because I felt like that was going to be the reaction from our administration back when they showed the optic of President Putin and President Xi together. And it didn't. And we got a much further move out of the China stocks. And then it occurs. This is what I thought was going to happen back over here. So it did go higher. We came back down on those comments and built a little bit of a move to the upside. But we're going to have to see where BABA closes today, with whether or not that news gets shaken off. Seems like it is. We've had some volatility ever since that announcement right when we started, but seems like the market's trying to catch a bid again now, ever so slightly. So if we can avoid anything moving much lower than where we are here on Alibaba, it is at a good wave 4 level at 38.2, above the 50-day moving average, sitting right on that AI target. Perhaps we can get this wave 5 to move higher. Once again, qualified but not confirmed yet. But we'll see if we can hold it and move up. And is that was that just another shot in the dark comment? Maybe because it seemed like everything was going good. They're all going to get together and talk. Vice President Vance was going to talk with his cohort over there, and then I don't know what happened. Literally, news came out right as we came on. But a little bit of volatility in these China stocks right now until the negotiations are finally completed, and who knows how long that's going to last. But just purely from the technical pattern, without taking all that stuff into account, as long as we can stay above this wave 4 high, or excuse me, low, as long as we can stay above this wave 4 low, you'd be fine to try trading a wave 5 extension. But if it breaks this 4, I think you got to get out, and we have to wait and see if this entire Elliott wave pattern becomes disqualified. But very news sensitive area, the China stocks right now.
No doubt about that. Next up, let's go to Netflix.
Yeah, we'll find out about them after hours. I was hoping somebody would ask. Lots of commentary on the financial networks this morning. Some people feeling that it's based rather nicely. and waiting for a piece of good news to blast higher. We'll see if that occurs. Had a quick wave 5 pattern to the downside here, but just enough to fall within the parameters of the algorithm. Wasn't that significant of a move. The whole thing was about, what, 150 points. And so we'll see what happens on earnings. It is set up for a breakout. We have the big triangle there formed right here. We can just extend that triangle based on those moves, extend it out. All the moving averages are at the same spot, 10, 30, and 50-day moving average. Netflix seems ripe for a breakout move, and it should be a little over 100 points on the move from the width of the mouth of this triangle should be coming on Netflix. But again, you can't pick a direction. They don't give guidance on their number of subscribers anymore. They've stopped doing that. But they are moving into a lot of other areas. So I've been wondering if the economy is, slowed a bit and travel is not what it once was. Are people staying at home watching Netflix like they did during the pandemic? That could be a catalyst for an upward move. The downward move case is that it is very highly valued. It's an expensive stock and it's priced for perfection. So if they disappoint at all, that could be a catalyst for the downside. So going to be a wild after hours market to see what happens with Netflix.
Definitely will be on the watch list. BTU.
Peabody Energy. So, the energy stocks had caught a nice bid, as you can see from this. They're taking a little bit of a break today as well. They talked about that on the financial networks this morning, that not only were gold and silver taking a breather, so was a lot of energy. But, this looks so much like gold. It's too vertical, too fast. That's why we talk about these rules. It never holds. You can't go vertically forever. Nothing ever does. And at some point, it has to come back down and correct. And that's what it's doing. And then we have to let it tell us where's the bottom. This is where the phrase trying to catch a falling knife comes from. We're just speculating on where it may find some footing. Best we can do is look at some areas of maybe some potential support. The first one I see really is right there around 27.5 or just below that. Not much to stop. I mean, it can stop and turn anytime depending on, what people do, whether they buy or not. But when you're looking for where's the first point of actual potential support, it's right here. So we could go a little bit lower on this before finding support, but it's still healthy. I mean, it's had an amazing run, and this stuff occurs after they have to churn for a while. The backing and filling that I talk about.
Alrighty, and from there we can go to CRDO.
Credo Technology. Pretty nice base here on the way forward. The algorithm still has a green, so it's not convinced that it's done yet. It's still active, and it's in an area here. It's a bit of a channel between this, this support level right through here, and draw that down right there, and a little bit of resistance that it has right through here. So it's formed this little channel here. If that wave 4 is going to hold and it's tested the 50-day moving average, which is good, it's back above the 10-day moving average. We're trying to get a bullish 1030 cross there. But, I oftentimes give an aggressive versus a conservative viewpoint, because we all have different risk tolerances. You know what yours are. If you're more aggressive, you might enter a little sooner than someone that's a bit more conservative. More aggressive takes more risk, higher reward. It's all about risk and reward. You're more conservative, you wait, higher percentage chance of being right, but not going to make as much. So that's how it all plays out. But for this one, it's so close to this resistance I don't think there's a difference between the two, aggressive or conservative. Just the prudent, smart thing to do is see if we can break above that resistance line. Then we're likely off in the wave five, and we've broken resistance, and it's so close that, yeah, I would just watch and see if we can break above that level. The exact price there is right around 157, somewhere in there. So if we break up around 158 with what looks like follow through, then this one could be off on a nice wave five, and maybe at some point gets up into the tractor beam area and gets near 200. So, yeah, that's a good one to watch. I like the pattern setup. I just want to see it break that little bit of resistance line first. I certainly would keep an eye on that one.
Thanks, Rob. And with 1 minute left, if we want to head over to the case study consideration for this week, we can go ahead and do that.
Yeah, with everything going on. By the way, I did want to show, so nobody asked, but I did want to show this on KRE just to update. I had shown this over the weekend in the U.S. market update here, that we are looking at the big move down from some of the regional banks. We've got a little bit of a snapback moving forward, and we'll have to wait and see if we can break above 62 and a half. Then maybe we're finding out there's just a few outliers in the regional banks that maybe got a little too risky in their loans, and they caused the whole ETF to go down, and maybe it's not pervasive across the entire portfolio of regional banks, but we got to break 62 and a half first. But I think that one's one that's interesting to watch. And if we can't break it, then perhaps this wave four goes lower. But that's just one that's in an area that I think Garner's keeping an eye on. In general terms, financials should do well when interest rates go down. It's a sector that you like to look for. But when you may be dealing with some problems in the regional banks, that changes things a bit. All right, so we're just going to do, this is not going to be an idea, Zach, this week. We're going to look at just, and this would be purely speculative, Cleveland Cliffs, because I feel like we're getting maybe a bit of a beneficial, I was going to say gift, but a beneficial entry here, where we had this area right through here of resistance. We broke above it, we tested it, and I think this is a good risk to reward setup here. You can see we took off, went vertically up, and then came right back down. And we're sitting on that area of support. And if it holds, then we can turn and see it move higher. If it breaks below this level right here, around 13, then perhaps the wave five is over and we're marching a little bit lower. But there's lots of congestion through here as we kind of weaved our way up here. They are zigzags, and they're nice ones because, they're not all based on one day's move. So there's good solid support through this area. And if it doesn't hold 13, it's got support down there again at 12 and a half. But what we're looking for is a bit of a reflex bounce back up off this area of support. And if it doesn't, I don't think we'd mess around with it. So yeah, this is just a post. It's not a full-blown idea, just something I thought we'd take a look at.
Thanks, Rob. We'll go ahead and get that posted after this session concludes, but I do want to take this time to remind everyone to register for the event if they have not already done so. As you said, lots of insightful and valuable information going to be covered in that free event that is taking place at 8 p.m. tomorrow night. So it's Wednesday, October 22nd at 8 p.m. Just drop the link in the chat again, and please go ahead and register if you are available and haven't already. We'd love to see you there. So I'll pass back over to you, Rob, for final thoughts.
Yeah, I agree. Hope everybody attends. We did it last week, and we had a lot of people that missed out and wanted to have the opportunity to ask questions, because you get to ask questions during the live presentation. Obviously, you get the recording and watch it over as many times as you want. It is an important aspect of what professional money managers do. And I think it's good information for anyone to visit. So hope to see you there tomorrow night at 8 o'clock. And again, we'll watch the last hour of trading. I kind of mentioned that when I was talking about the S&P after that Friday drop. The last hour is always important. If you don't know, the bond market closes at 3 o'clock, and then the equities market closes at 4. So that's a good hour for the institutions to be involved only in the equities market, which is part of the reason why that last hour is so important. But I think it's even more so now when they're sitting on some additional cash that they raised on that Friday. What do they do with it? I think it's going to help determine where things go over the next couple of weeks. So with that, have a great rest of your trading day. Look